Mid-cap index up 1.5%. Jay Bala of cashthechaos.com joins in on the show now. Jay, afternoon. Do you think the 200-day moving average, 17,290, 17,300, is a firm support for our market? Because despite all the carnage that we've seen in the last couple of days, this 200-day moving average has held on. We haven't breached it. How much, do you think this is going to be a firm support for us? How would you view the next, the medium term?
Yeah, thanks for having me on the show, Rima. See, the market's in the habit of, transferring the money from the majority to the minority, and the much-tracked reference point of 200-day moving average is just a illusion for the moment. Markets have just got here, and it's, in my opinion, it's just a temporary support. And as I've been saying for several months now, the markets have got a great potential to drop below the June 2022 low. And that's about 15,183 intraday low and probably 15,300 on a closing basis. So, the markets are likely to head below that on a medium-term basis. From a short-term perspective, I think we are likely to see further intensification of the fall that we've seen in the last few days. And in all probability, the markets are unlikely to climb beyond 18,200. And if there is some sort of temporary bump up, that will probably get capped around 18,200. And we are likely to see much sharper and a deeper fall from here onwards.
Okay, all right. Hi, Jay. You have been maintaining that stance. What about the Nifty Bank, though? This week itself, yesterday itself, we went to around 39,500. From there, it bounced a little bit. How would you trade this index? Because that's the one that's taken the harder hit in the last 1 week or so. Trade and levels are located.
Yeah, see, the setup for index leaders within the sector, ICICI and SBI, they've got a very negative setup. And I won't be surprised if both these stocks halve from their peak. SBI made a high of about, I think, 570, and ICICI about 970. So, that's the potential. I'm not saying it will go there, but it's got that much potential in the medium term. So, so I would expect the banking index to take leadership on the downsides going forward. The short-term resistance is about 41,560 to 41,720. The short-term support comes in about 39,170. So, we're going to see minor bounces in the banking sector, but the medium term is very strongly down, in my opinion.
Okay. Jay, hi, good afternoon. So, it's been quite a January for the market, right? We've had to digest so much of news flow and things going really all over the place. Let me ask you about the one part of the market which is a little excited, purely on news flow, on fundamentals, and that's the entire capital goods space, power, some of these defense stocks. They're all excited for obvious reasons, but purely speaking on technicals, looking at the charts, any one of these that kind of catch your fancy, that's on your radar, which has some strength behind it as well?
See, if you consider M&M as a defense stock, probably it's got some relative outperformance there, and it's also slowing down in its momentum. And if you, I would say it's got not too much upside, but at the moment that's one of the strongest stock there. But when it comes to relative outperformance, probably you can look at something like an IT, or I wouldn't put too much money as fresh longs from this point onwards. So L&T, which was outperforming until a few days ago, even that stopped out, in my opinion. And the stock is probably going to go back to test the June lows. So L&T was an outperforming stock until a couple of weeks ago, but now even that's turned down. And so I don't think there are any fresh pockets within the strong pockets within the capital goods or the defense sector.
Jay, you're throwing bombs, yeah. I mean, this will half, and that will go down to June lows. I mean, as they say, thoda to khayal kariye. What can that's a view, and that's perfectly fine. But global markets, etc., looking a little better. It's not exactly all down and out. I mean, look at what's happening. I mean, actually, the US tech sector was trading almost as if it's go-go time once again. right? Look at what's happening with Tesla, Bitcoin. It's a bit of a risk on. Now, we'll find out if this is for real or it gets reversed with inflation prints, labor data, Fed, etc. But if that were to be, I mean, if this were a move which continues, you would still hold the view that irrespective of what happens elsewhere here, things are going to look pretty dire in the medium term?
Yeah, that's a very important question, Prashant. Yeah, I think the trends are pretty independent of what's happening within the global markets. But I think, we have seen that in the last several weeks, when the world markets were staying up, Indian markets have started caving in. They came from 18,800 to 17,400. So that's a 1,400 points drop. And all that talk about decoupling and all that, that's been blown to bits. And, it's going to continue to do that. And when it comes to the US equities, I think it's a matter of time before that also takes a turn down for the worse. And that will give added pressure to the Indian markets. Until now, that wasn't putting pressure on the Indian markets. So watch out for the S&P futures 39.63 and 39.01. Once that get taken out, it's pretty convincing that the short-term bump up that we saw from December, that's also done. And we will get additional pressure from the global markets.
Additional pressure from the global markets. That has a finality associated to it, but that's okay. That's perfectly okay, as Prashant said, Jay. Appreciate that view, and we will, of course, remember it. Thank you very much for joining in and giving us your perspective on the markets today. That's Jay Bala of